Welcome to this investing series. I have only one goal for the next few years, having $500 each month passively from the $200 invested initially. And again, each time I will invest in front of you, showing you which stocks I buy, why I buy them, and how I adapt to the markets. And above all, this will let you invest at the same time as I do. Hi, Jarod here, and today let's invest in the stock markets and let's dive into it. So my current portfolio is composed of 5 different companies, and each one is part of a different sector because diversifying allows me to minimize my risk, basically. And I have stocks in the energy sector, consumer discretionary and staples, healthcare, and information technology. And for now, some companies went up when others went down, and that's typical for a portfolio. And by the way, my portfolio could have doubled in value or lost 50% of its value, but I don't care, though 50% is quite a lot. But you get my point, because I invest in the long term, at least 1 year, even 2 to 5 years. So this screenshot here is just to keep you updated. And like the last video in September, I will invest $200, and I decided again to divide it into 5 for the 5 stocks I will buy today. So $40 each stocks. And first, small news. Fed rose interest rates again. Great, but I don't care. As you may know if you follow the news, the Fed just rose interest rates again by another 0.75 percentage points or 0.75%. And Powell, the guy we only call to announce interest rate hikes, said that his intentions were to bring inflation down to 2%. So it basically means that the Fed will continue to rise interest rates again and again. And in fact, they've even said that they would increase it by 4.5% by the end of the year. And as always, when interest rates go up, people sell and the market goes down. This is a vicious cycle no one can escape. And while lots of people might be afraid and would rather sell, as a lot did, I would recommend buying even more. And here are 2 reasons. First, no one knows how the market is going to react to economic events. Otherwise, this video would have been called How to Run Speculation in 5 minutes. And second reason, in the previous video and in this one, I've chosen stocks that perform well in bull and bear market. So when the market goes up, the stocks go up. And when it goes down, the stocks still go up, at least in the long term. And it is now time to invest. The first company is a multinational technology corporation founded 47 years ago in 1975, which produces computer software, consumer electronics, and personal computers. And without that company, I would be close to nothing today. And investing in this company is investing in the vast majority of products I use every day, from my phone to tablet to software to YouTube to video games to cloud computing and so on. Of course, I am talking about Microsoft. The company has been paying dividends continuously for more than 17 years now, with a current dividend yield of 1.15%. Its net income rose by 19% to reach $72 billion, with a good increasing return on capital of 22%. There is nothing much to say. It is a clean and solid company. Okay, so first company, we said Microsoft. I will buy €40, so that's the same $40. Yep, just confirm with the fingerprints and done. The second company was founded more than 100 years ago in 1902 and manufactures and markets lots of products worldwide. It operates through 4 business segments: safety and industrial, transportation and electronics, healthcare, and consumer. And above all, you probably own one of its products. The good news, the company has been paying dividends continuously for more than 33 years now, with a current dividend yield of 5.17%. Despite the pandemic, 3M's net income increased by 8.66% in 2021, and it managed to have a great return on capital of around 15%. Lastly, it has an impressive low price-to-earnings ratio of 15.8, and we can compare it to the sector where 3M operates, US Industrials, with a current P ratio of 24. Okay, second company now, 3M. There you are. And again, monthly, beginning of the month, $40, fingerprints, and done. The fruit company was founded 44 years ago and is the largest home improvement retailer in the US. With 500,000 employees, the company primarily serves homeowners, renovators, electricians, plumbers, and painters. I am talking about Home Depot. The company has been paying dividends continuously for more than 43 years now, with a current dividend yield of 2.85%. It increased its net income by a whopping 27% in 2022, with an impressive return on capital of almost 42%. Moreover, the company's earnings per share, so the company's earnings we get for each share we buy, is at about $15, and its price to earnings ratio is very low, at about 16, while the industry is at 46. This is impressive. The third company now, Home Depot, great. Beginning of the month, always 40 euros. Yep, thank you. And there we go. Okay then, the fourth company was founded 44 years ago in 1988 and manages close to $10 trillion worth of money, making it the world's largest asset manager. And the firm also takes into account current events like climate change and Russia and Ukraine's conflict, making it kind of humankind friendly. And above all, the company invested in huge companies like Microsoft, Amazon, Tesla, Apple, Johnson & Johnson, and so on. I am talking about BlackRock. The company has been paying dividends continuously for more than 17 years now, with a current dividend yield of 3.34%. Its income increased by almost 20% in 2021, with a solid return on capital of about 10%. And again, BlackRock's earnings per share is remarkable, almost $40, so you pay close to nothing for the price and value you get here. So the fourth company, BlackRock. Great. Still the same process. It's so easy now. 40. Yep, and thank you. We're done. Last company was founded 115 years ago in 1907. It is known to be one of the largest shipping companies today, on the ground and in the air, all around the world, and is considered to be ahead of its competitors, DHL and FedEx. Moreover, it survived the 2 world wars and thousands of bear markets and recessions. I am talking about UPS. The company has been paying dividends continuously for more than 21 years now, with a current dividend yield of 3.76%. It has strong earnings, with the net income which increased by 860%, mainly because of the pandemic. It also has an awesome return on capital of about 30%. And the fifth and last company, UPS, which I've seen a check this morning, by the way. $40 confirmation, and that's it. And do not hesitate to tell me which stocks you would buy and why during a period of economic instability and a recession. Thank you so much for watching. Feel free to leave a comment down below, subscribe if you want to see more, and I will see you in the next one.